Shocking truth, the Middle East has just witnessed its deadliest month in 5 years, with 500 civilians killed in the past 30 days alone. And it's about to get much worse, as $1.2 billion in trade hangs in the balance. But here's what nobody is saying: the real driver behind these tensions isn't just politics, it's the $3.5 trillion invested in Middle Eastern oil, and the 2.5 million people displaced by conflict. This is a crisis that will be felt from Tokyo to New York, and it's only just beginning. The consequences are already being felt. The Nikkei has plummeted 5% in the past week, while the Dow has shed 200 points. But for you, the real risk is the potential collapse of the $10 trillion global trade network and the unprecedented economic instability that would follow. By Tuesday at 3 p.m., we could see a massive sell-off in Asian markets, triggering a domino effect that would be felt worldwide. The story begins on January 10, when a series of mysterious attacks on oil tankers in the Strait of Hormuz sparked a chain reaction of escalating tensions. As the US and Iran engaged in a war of words, the price of oil skyrocketed 15% in a single day, and the global economy began to tremble. But what the experts won't tell you is that this crisis has been years in the making, fueled by a toxic mix of geopolitics, corruption, and environmental disaster. By March 15, we could see a full-blown oil embargo, crippling the global economy and triggering widespread unrest. And then, just as it seemed things couldn't get worse, a devastating cyber attack on April 1 brought the region's critical infrastructure to its knees, exposing the shocking vulnerability of our global systems. But here's the twist: the real beneficiary of this chaos may not be who you think. While the world focuses on the Middle East, a quiet player has been making massive moves in the shadows: China, which has just inked a $400 billion deal to secure a stranglehold on the region's oil supplies. As the US and Iran trade blows, Beijing is quietly positioning itself to reap the rewards of a destabilized global order. And with the Chinese yuan now accounting for 10% of global trade, the implications are clear.